Let's discomplicate Adobe today. Hi guys, welcome to a new series here that I want to do that's called Discomplicating Stocks. But as always, coffee. I have mine today. The stock of today is Adobe. I added this stock last week in my portfolio and I really want to make a video about Adobe because it's really a big company that has now a lot of hate. If you look at the stock, we are going to see that they are like the last 5 years down. We're gonna start with an overview of the company, okay? If you are asking yourself, what is Adobe? I don't know this company. What's Adobe? Adobe is a software company. They have apps, like a really big environment of apps to creative and editing photos, videos, making illustrations, drawing. They are really a big environment of creative apps. Some of the key products are Photoshop, Illustrator, InDesign, Premiere Pro for videos editing, Lightroom for photo management as well. They have the Adobe Acrobat, that's for PDFs, that's for edit and managing PDFs, and much more. Adobe was founded in 1982, so as you can see, Adobe is really a huge company. Since I started doing videos, heard about Adobe, the products were like a standard for the creative production, videos development, videos editing, photos, and everything. More we can talk about now. We can talk about market share. What's the market share of Adobe? The whole creative software, including photos, videos, everything, they have more than 50% of the market share. Okay, they are really the biggest company in this niche. In the photos, graphics, with Photoshop alone, they have 35% of the market. And with Premiere Pro in the video management niche, they have as well 35%. They are really relevant for the industry. Now that we have understand the company's position in the market, let's see some numbers about Adobe that I have here. So here I have an Excel file that I did for Adobe. I got these numbers in macro trends, so everything is from macro trends. And let's walk through here and see some points. First point here that I want to talk about is the gross profit margin, okay? In the last 5 years here, they had more than 90% of the gross profit margin. The revenue growth in the last 5 years were 13% per year. Okay, of course, we can take past returns and think it will be in the future, but we're going to talk about our perspectives for the future. We just taken here a overview. Price earnings has been always around 56. Net income divided by revenue. How much of the revenue they can take to net income? Around 28%. That's a lot. As well, net income has been growing 7% per year in the last 5 years, and net profit margin is around 28% as well. Really good. They have really a good margin from the net earnings. Now let's see some points about the balance sheet. Current assets divided by current liabilities. That means current asset are every asset they could turn in cash in 1 year, and current liabilities are liabilities that they need to pay within 1 year. The current asset has been always higher than the current liability, so that means they have more assets to turn in money than the current liabilities that they need to pay within 1 year. Last year it was almost the same, so they have the current assets, liabilities to pay in 1 year was the same, so they are like even. Of course, always better if you have more current assets than current liabilities, but still is a good number. They are still okay, they can pay. If you see here long-term debt, that's the debt they need to pay more than 1 year. Last year was $6 billion because they earned $7 billion. So in 1 year, just with the net earnings from 1 year, they can pay the whole long-term debt. One point here is that the shareholders' equity from 2024 to 25 has been lower. They had from 24 to 25 less assets than liabilities, but that's not a problem to me. You know, it's the first time, so it's just like they are maybe they are making more debit to improve the creative softwares and implement more artificial intelligence features. That's what I understand here. But if you look in the share outstanding, how many shares are in the market, they have rebuying stocks a lot through the years. From 24 to 25, it's a good price, so they are rebuying more stocks, and that's what a company should do. They should rebuy their stocks when they see that's a lower price. The only thing that's not green here to me, that's a little to a point to look, is the debit to shareholders' equity. Normally, good is around 0.80%, but now they have 1.54%. Again, that means they are taking more debit. As I said before, I think they are taking more debit to improve the tools and the features in the creative apps. As well, if you see here, another point is the cash flow operations. They are receiving more money each year from the operations, from users using the apps, using the tools and everything. I think that's it. Now let's see some points about if the company will still be relevant in the future. What I think. They are a big company with really standard apps in the industry. And of course, they have a lot of competition now with Nano Banana for photos, another apps for photos as well. I think Figma, Canva. Till now, in my user experience, I already used Canva. I never used Figma. Between these, Photoshop was the best editing management and editing photo app that I used. Even with artificial intelligence tools, you will always need someone to check and make specific changes, because artificial intelligence can do it now, and I think in the future we will just give you the basic, like a template. Okay, here we made a huge part, but now you polish the rest of the video. So that's my vision. I think they will implement a lot of artificial intelligence tools that will help, and they will not lose leadership and is relevant in the market. Comment here, what do you think? You think Adobe will continue to be this company, this leader in the niche, or they will lose market share to another apps? And if you like this video, thumbs up. I hope you enjoy your day. Bye.